So welcome back. This is the May Mastermind. And in this mastermind, what we're going to be doing is covering a few topics. But I'd just like to welcome, we have a bunch of new people coming on today. So this mastermind I put in May is actually going to be a unique one where we're bringing in a bunch of people from outside through different platforms, just testing a whole bunch of things. And I've actually opened this one up so that we can kind of create a new dynamic. So I'll just go over the quick agenda for today, and there'll be plenty of time for questions and answers and everything like that. Just remember, if you're having any issue with audio, please raise it with me because I will help you solve it instantly. But today we're going to be covering the Bitcoin market. We're going to be taking a look at Dow Jones, the Aussie market, and a bunch of people have been requesting commodities like copper and gold and silver. Now these commodities and these requests for these markets come up every now and then, so that we don't always cover special markets like copper. Often we're touching on gold and silver and things like that, but not a lot of people have been touching on copper. So I think that's now starting to get into the retail investor's head, which could potentially mean that we're looking at super cycle sort of stuff, or we're heading into a top soon. So it's interesting. I just like to see the dynamic and what people are requesting, because it sort of gives me an idea on where people's eyes are looking. So once we've taken a look at those markets, we'll open up to some questions. If you have any questions, if not, we'll totally skip it. And then once we've done that, we'll head into the main part of today, which is going to be backtesting and combining 3 strategies. So I decided to actually combine up to 3 strategies in the backtest for today. And that's because I want to give you a solid understanding of what backtesting is and how flexible you can be in your testing. And then to sum up the backtesting, I'm going to talk about reasons why we actually backtest, and then we'll open up to questions at the end. Now I'm going to be recording this. The recordings go onto the program itself. So if you're not in the mastermind group, you may not actually be able to see the program, but all the recordings are actually going to be there. And if you come in late, don't worry, you'll be able to see it in the program group, okay? So we'll go ahead and get started, but we just wanted to go through a quick disclaimer. So first of all, I don't hire any financial planners, and I'm no longer licensed to provide any advice. So please keep in mind that anything that you learn here today is going to be general in nature. And by general, I mean like really general. It's also going to be mostly taken from an educational point of view. So there's not going to be any tips. There's not going to be any suggestions for you to follow. I really want you to just have an open mind and listen. And the idea is that you learn something. So don't go out and buy a market or try and trade a specific index or stock or anything like that you hear about. It's all purely for education, okay? And the disclaimer ends with the usual, unfortunately, a company won't be liable for any loss caused, whether due to negligence or otherwise, by attending. So thanks, ASICs. Let's go ahead and take a look at market research. I'm going to go and click over, first of all, to TradingView, because I'm going to do it big backwards today. Actually, no, I'm going to switch over to Optima. So there's 2 kinds of software I use. A number of you are familiar with TradingView. So TradingView is a free program, and it enables you to pretty much track and trade almost everything. So I'll go ahead and switch over to that now and give you a quick rundown on our Optima. I'm just waiting for it to load up now. Okay. But yeah, so TradingView is free and anyone can use it. And then you've got professional software such as Optima. And Optima costs a couple of $1,000s a year, but it enables you to do things that these other softwares don't enable you to do. So I'm going to be starting off with the current cycle for the Dow Jones market. Now, for those of you that didn't actually participate or see the latest YouTube video that I created, so if you're not following that channel, go ahead and follow it. We're actually waiting to see what happens right now, because we have one forecast here, and we have 2 lines that we're watching. So the black line that you can see is the actual Dow Jones market data. So what's actually happened in the market. And the orange line is actually the forecast. So we produce a forecast once a year, and we pretty much just try and follow these forecasts throughout the year to see how accurate they've been. So if I go ahead and line up some of these highs and lows as best as possible. I'm not going to get an accurate forecast this year. We can see that the market rose up with the forecast, and then it fell. We had our double bottom sort of action here. Market rose up strongly into our top, and then it fell away. And now we're at a point of interest, I would say. So to summarize this forecast, where we are right now, if the market moves higher, we're going higher. And if the market moves lower, cool. Sorry, guys. I had an internet drop out, and that internet caused my mic to not work. So I've just switched to another internet service. Sorry about that. Highly unintentional there. So what I was in the process of was just moving from Optima to TradingView. And just to summarize what we had over on the Dow Jones is that we're simply in a state of flux in the market, and we're just waiting right now for the market to give us a signal of direction. Okay, now if at any point you guys can't hear me, you follow the same protocol, you let me know so I can go ahead and get it fixed. I really appreciate that. So on TradingView right here, what I'm going to be doing is I'm actually just going to be opening up the XJO and going over why we always need to move with the market, not against it, okay? So you should have the chart on your screen now. Now, what we've been doing, if you didn't actually get the chance to watch the YouTube videos, I did cover this last time. What we've actually been doing is tracking our turn dates in the market. Now, we actually had one turn date that was meant to appear here, and I have to now update it because we now have the data, and we now have the direction of the market. We had our turn date was forecasted between the 24th and the 26th. The 26th was actually a top, and the market fell lower. But what actually happened after that is the market reversed and swung higher again. And when that occurs, whenever you get these turn dates that are produced and the market swings higher straight after it, that is a bullish signal. Now, we have to be open and willing to move against the market if possible, because if we zoom out right now, what we have here is we're now coming up against the all-time high that was set before the coronavirus. Okay, so that's back in February 2020. So there's any chance now that the market could try and touch it again and fall away. But so far, it is signaling strength, and I simply cannot hold a bearish view on the market as it continues to push higher. And this bar here was relatively strong for the day. What do we have for the day? Let me double check. The XJO moved up 1.2% for the day. So that's a relatively strong move, and we moved up quite strong into the all-time high. So whilst it's great that we can forecast the turn dates, we can't move against the market. If the market wants to move higher, we simply need to move with it. Now, one of the comments and one of the forecasts that a lot of people are putting out right now is that the Aussie market in particular could fall as much as 10%. And when I did the math on that and we were at these highs here, that would put us down to around this green line, which is at 6,400 points. So a lot of, I don't want to say professional, but a lot of highly knowledgeable and what you would call professional traders and investors are looking for downside move right now. But if we take the short-term low that occurred here and we move it up to this high here, we can divide this range of 664 points into three areas. That's 38.2% level, that's the 50% level, and the 61.8% level. So if you don't understand what I'm talking about, if you take this low and take this high, and you divide it up by 38.2%, 50%, and 61.8%, you get levels of strength, and that tells you how far the market can fall and find strength. The higher it finds strength, so the higher above this green line that it finds strength, or finds support, I should say, the stronger the market is considered. And it didn't fall below this yellow line, which also coincided with past tops. So the indication for strength is still in the market, and until these three here are broken, I can't also Yeah, that's the Fibonacci ones, my friend. We can't determine too early on that the market's going to push down. We need to wait for it to fall through. So if you're using this tool, if you're trying to find this tool, it's called Fibonacci retracements. And what we have here is we have our range, and a range is simply a point between a high and a low, or a low and a high. And then you divide that range up and you divide it into percentages. When you open up TradingView, it gives you a bunch of percentages that you can divide it up into. So 0, 236, 786, 618, 1, 1.618. The only one that's in this range, or in this list, I should say, that isn't related to Fibonacci is the 50% level. And I'd also go on to say multiples of that 50% level. So 50, 1, 2, 3, 4. Those are more so related to the studies of Gann and what Gann found in the market. And that's why I tend to color them different, so that I know what actual study I'm listening to and referring to, and going from there. So when I put it on, I will go ahead and have 2 yellows and a green in the middle. The green one right here is the 50% level, and that's the halfway point between a major top or a significant top and a major bottom or a significant bottom. So yeah, something for you to take away from this. So right now, just to summarize this one, bullish is the way it's looking, and we can't determine bear market territory until we start to fall below the most recent range. Now the range will move as the market moves higher. We will need to move this higher and continue to move it higher for as long as the market moves higher, so we can get new ranges. There's every chance that this market could push towards this level right here, 7,300. I'm going to mark that. And I won't go into the reasoning behind my decision on that one right now. And yeah, let's mark this one and see what happens. 7,300 points, which would give us a gain of around 1.84%. So that could occur if we have this sort of run again in maybe 2 or 3 days. Let's see what happens. Okay, so what was next? I think commodities was next. Let's go ahead and start off in gold. Was there any questions regarding the Aussie market first, by the way? Or we all call to move on from that? I'll give it 5 more seconds. Just raise your hand or send anything through. Nah, we're all good. Everyone's good. Okay. So gold. Anyone here invested in gold? We were watching the gold market for about, I shouldn't say for about, we're watching the gold market for well over 2 years now, because we put out some very major forecasts for this market. We did forecast the top, we did forecast this bottom, and these 2 bottoms were situated very, very nicely with a double bottom, also on time counts that we were producing. And then in our last major market update, I believe it was this time last month, we suggested that if the market comes down and touches this band and stays above it, well, we know the direction. And as we come back 1 month later, we know that we've had a very bullish run, and we're up around 7.5% in price of gold, which would equate to 30, 40, 50% those sort of gains in miners. So that's a very clear reason why we want to watch the gold price. If I go ahead and start putting on some Fibonacci, because I'm going to do some live analysis with you right now. Let's go ahead and do that. Pop this one on. Go ahead and squeeze these ones on. Okay. Easy. So we have some resistance in the market, and I'll go ahead and just start to jot these on. What I want to do is I want to find, I can never find it when I want it. I want to find my rectangle. We have some natural resistance in the market. If we go from this high to this low, and if we follow this 38.2% level, we can see that over here in the past, we had congestion in the market. Now that congestion in the market is a natural congestion level, and we know that Now, moving into the future, because these bottoms have formed, what you'll notice is that the past helps you find the future well in advance. And I know it's getting a bit esoteric right now, but if you were to draw on your Fibonacci levels with past data, so if we were to move the chart backwards, for example, and we were to take these highs and sort of try and find where the market could fall to, what you'd want to do is you'd want to find prior support and resistance levels and start lining up Fibonacci and the Gann levels on them, so you can see how far the market could fall. So if we were to, for example, put the 50% level here, and this is just hypothetically to give you an example, and you were to do like maybe 5 or 6 of these, you can see that the 50% level hit these lows and hit these lows here. So you could put out your own little forecast that we could see 1640, and then you'd go and find other levels. So you'd put it out, we put the 50% level in this congestion area, and you could say, well, from this top, if the market is to run this low with these congestion periods, then we could get a low around this level here, which we see did occur. To sort of play around with it and sort of prove this method to yourself. Oh, got the what happened there. Prove that method to yourself, because you're the only one that can prove these methods. So I'm just showing you off the cuff, you know, what's actually possible. The market has already dictated well in advance what it's going to do, and it shows you in the past what it's going to do. So I just wanted to give you a bit of esoteric learning there. So let's ignore that. So let's go and find out all our congestion levels. Those two look good for now. So if the market for gold in specific, go ahead and get my brush. If the market moves up, there's a very high chance it could find congestion in this level. And what we have here is we have an active trend, well, I shouldn't say an active trend line, an active angle line. And if it falls below this active angle line, I reckon we could definitely get some support here. So I'm not going to go into any more analysis than just simply showing you how to do this yourself, because I don't want to confuse you right now. But what I wanted to show you was how to actually start to build your own little support and resistance areas. So, and how to think into the future about what could actually occur. So let's go back. If the market sort of finds some support here and moves up, I think that this area is going to provide a resistance level. It already did once, you know, it came up and sort of grinded against it. We're not looking for perfection. We're looking for a slight percentage off it. That's okay. If the market falls down, I think it could hit this line, and then it might bounce up, because this has sort of been running higher like this. But if it does fall below it, it could go down to here. That is your thought process that you should also be doing with every single market and every single cryptocurrency or stock that you actually get into. You want to know exactly what it is that the scenario for that market is going to be. I'm going to get rid of these because we'll have it on the recording, and I like to keep my chart clean. So if I go ahead and get rid of all this now, I can see that I have support and resistance levels right here. So this price support and this future resistance. Does that make sense to everyone? Am I talking a bit too esoteric in this topic? If not, that's okay. We'll keep moving on because we have some learning to do soon. But that is what now watching. Now I won't go into time cycles or anything like that, because we can clearly see what's ahead of us right now. So doing some quick research, just while we put that on hold, just want to see how the market's moving. Okay. So another thing that we want to talk about is copper. Now this is going to get a little bit more esoteric, and the reason for that is simple. I move one step forward and I move one step back. I move one step forward and I move one step back. But I have had some requests about copper, and I've also had some people asking when we may see a top and what the market cycle is doing. So I did some research. I started to look at prior highs and prior lows in the market, and I started to formulate an idea that this market is moving in rhythms. And it's moving in rhythms around a circle. So if you actually get a circle and you divide it up, I'll see if I can actually draw on this one or not. Sometimes they don't let me draw. Good. So what you can do is you can get a circle and you can actually divide that circle up into portions. Now, this is something that W.D. Gann often spoke about. And he said that the market will move around the circle until it forms a complete 360-degree rotation, and that is a cycle completed. What I'm talking about here in this essence is that when we have these cycles, so let's say, for example, we had a top here and we had a top here, and that top equaled 118 months. Well, if we were to grab this circle and we were to go 360 degrees into the future, what we would do is we would repeat that and we would go out 360 degrees. And in this case, it was just short of 118 months. It was 117 months, but that produced another low. And if we repeated that 360 degrees again, well, that gives us a low that occurred here. So 117. And if you repeat that another 360 degrees, well, that gives us a potential low or a high in February 2030. So that is how you forecast well into the future using time cycles and time analysis. So when we have all these, 35, 40, 90, 84 degrees, I speak in degrees. I know I should speak in months, but 31 months equals 30 degrees because we're always moving around this circle, okay? We're finding how many degrees around the circle are we going and where's our full rotation. So 360 months is 360 degrees because we've gone around the circle completely. Probably making no sense, but I just want to show you what's possible. So we move 30 degrees around a circle and we get a top. So top to top, 30 degrees later. And what I did is I just researched how many times are we getting these repeats in degrees and tops. So this low down here, if we move 30 degrees or 30 months, it produced a top 30 degrees later. And then we do that enough and we're able to actually start to see into the future. So here we've produced relative cycles that could end up playing out into the future. And I've just tried to find out how is this market moving around a circle and what degrees of that circle or how many months should I be focusing on. Now I can almost assure you, you're not going to get any sort of this training or understanding of the markets anywhere else because a lot of people don't fully understand the markets in this angle. But in saying that, because we had a 45-degree angle here, we had 45-degree angles here. Now we're not looking for perfection. 43 to 47 is perfectly okay. 46, 45, this one's a forecast. This one's 45. So if we're having a 45-degree reaction in this market for copper, we could be looking at getting a top around September 21, or it could be a low. I haven't gone in to see if it's going to be a top or a low yet. If we go out and we're getting another 45-degree reaction here, we could be getting a top or a bottom in January. I'd say because we're looking at this monthly chart like this, probably between December to February, okay? So we could be looking at another change in direction here. Now, the reason why I think that this one is going to be a powerful one for 2023 to 2024 is because we've actually got two time cycles that are expiring. And what I mean by expiring is that they're running out of time. We have a 90-degree, which has produced movements in the past, and we have a 45-degree, which is 50% of that 90-degree angle, okay? So 90 divided by 2 is 45. That's simple maths, okay? So we have a full cycle repeating, and we've got half a cycle repeating. So when it comes to the super cycle of copper, we could definitely be looking for some major action around 2024. And then we move out 84 degrees, 90 degrees, and 85 degrees here, or another 84 degrees. That gives us 2027, another one in 2025, 2024 range, another one in 2025. I think there's going to be major actions occurring in this market between these timeframes here. Excuse my chart getting message. I'll delete it all later. But this is the end of the real estate cycle. Let me put that real estate cycle. And the real estate cycle is going to bring on massive speculation in the market, which is going to force prices up, and away. So the real estate cycle, I'm not going to give you the keys to the kingdom just yet, but the real estate cycle, let's say hypothetically, is 20 years. Once it runs out and once it's done, it's actually going to bring the markets down. Now, to give you some context, the market action that we saw all around the world last year, that was produced because we entered the halfway point of that real estate cycle. Now, if I could make it very important to you and very open and honest, 50% of any cycle is going to produce a major reaction, and 50% point of any major long-term cycle, especially the real estate cycle, is going to give you a recession. So R for recession and D for depression. So to put that into context, 2007, 2020, 2026 timeframe. And that's why I'm very interested to see what happens in the later half of this decade, because that's when the major things are going to occur. Okay, so to recap this, if you're in this market and you're looking to understand the super cycle, we've actually got a 60-month angle expiring in June that could produce a higher low or a short-term top. And then we have a October top for 2022. And we have a top or bottom occurring in October of this year. So that's something to be watching for. Once we get that, we then want to understand how far the market's likely to fall. So as we can see, if we enter a bear market, we start to draw some similarities. So if we're moving down in price, we can see that the market moved down 45%, 50%, 55%, 35%. And we repeat that in future, 40%. This one was 35% down. This one was 60% down. This one was 60%. We can definitely expect to see the market fall between 40 to 60% if the super cycle ends. Now, let's just say hypothetically that the super cycle ended up here at $4.90, which is, I believe, what do they call it? $4.90 is, I think, per pound of copper or something like that, or per kilo. Can't quite remember. I think it's about 19,000 or 18,000 per ton. This is in the microns of that. But if we were to fall and that was the top by 40%, that would bring us down to $2.90, and by 60%, that would bring us down to $1.90, which is in line with these lows, and the 40% was around these past highs and lows. So that's every chance that in advance, by researching what happened in the past, we already get an idea on if the market reacts lower, how far we could be falling. Now, if it's going to keep running, well, we also need to see how far it can run. So what we do is we look at past runs. So we have a 135% run, 200% run, 200% run, 200% run, 70% run, and then currently we are at 145% run. So with that said, if the market was only going to run 70%, well, the market would have finished running back here. We know that that cycle is not repeating, and we now have another cycle running out. So what we can be looking for is the 130 to the 250% range. So that would put us in the, let's go up to 200%, in the range of around $6 for copper. And if we get a cycle blow off, like we did here, which was a 260% run, which they're suggesting is going to be like a super cycle sort of run. What's going on? Why can't I use this tool? Let me just move this higher. That would take us to around $7 for copper. So is everyone sort of getting a new per pound? Thanks, Mana. Appreciate that. Yeah, I don't have all the information in my head all the time, unfortunately. But is everyone sort of getting an idea on my thought process and what I'm looking at and what I'm why I think a certain way? Because it's important to look backwards before you look forwards. A lot of people come out and they simply look forwards, and I have a different understanding of the markets because I've learned how to do things slightly differently. And if we can just find these repeat runs in price and time, then we can sort of forecast out on how far the market's going to run. There's obviously hundreds of different ways you can do it. And I've got all these tools here. I've got Elliott wave, reversal patterns, all our time cycle stuff, Gann research. There's 100 different ways we can do it, but I like to try and keep things simple. Now, if we were to do some simple, let me go ahead and clone this chart. I'll just delete everything quickly and see if my stuff works. We did simple maths with ranges and Gann levels and whatnot. You'd simply be looking for 138.2, which is a Fibonacci level, 161.8, which is a Fibonacci level, 200, 238.2, 212 if you're doing Gann analysis, 125 if you're doing Gann analysis, 250 if you're doing Gann analysis, and then you'd simply go up by that like that. And what you'd want to be doing in your research is you'd want to be finding what's called price clustering. I already I think it was the gold market. I showed you briefly how to find price clustering, and it's not a topic that I've taught a lot of my masters at the moment yet. But when you find the market clustering around a certain price, it gives you a strong indication that the market could find support or resistance there. So we go ahead and use this range and extend it from here. And then you repeat it hundreds and hundreds of times until you're satisfied with your research. You start to see that price begins to cluster around certain areas. Some Gann research. Too high, sorry. And then once you've done that and you've got your cluster, well, you start marking where price is starting to top out. And what I mean by top out is where a lot of these past ranges, because remember, we've seen already that the past can help us understand the future, where the past is telling us that the market is starting to get exhausted in its price extensions. And we'd mark that and we'd save that on our chart. And all we'd do is watch the market and wait for it. And when it comes up, we would analyze it very slowly. We would analyze it day by day. So it could be doing this. And then we'd see what happens when it comes here. And if it doesn't break through it, well, we know that anywhere around here is time to probably sell or reanalyze. See what happens. Does it move down from there? Or does it move up and try again and break through it? So we don't want to be making any rash decisions. We just want to get our levels in place. And we want to sort of judge in advance how the market's going to run. Okay, I'll save that just because I think that's a good example. All right, now with Bitcoin, I know y'all come here for Bitcoin analysis. There's a lot of things that I am trying to study with Bitcoin. So we always want to keep track of our daily, our weekly, our monthly views. We want to understand our swings. We want to understand the Kagi system. We want to check out our price forecasts for Bitcoin and where it could be heading to, which I'll talk about soon. If we're doing any pattern analysis, which I've just hidden a lot of it for now, we want to be keeping track of that. And I won't go into time, but we also want to check out the astrology or the astro side of it. So if you're not into financial astrology, that's okay. If you don't fully understand it, that's totally okay. It's a new subject for a lot of people. But you want to develop a whole system for analyzing the market. So what we're going to do is we're going to head over to the swing chart because I just want to give you guys an idea on what we're looking for. And pretty much what we want to be doing is we want to be on its current trajectory. We want to be moving up between this halfway point. So currently the market from its last swing has fallen 49.7%. And that, if we go ahead and do our price retracements, would give us a halfway point of around 44,746 points. Now, if I go ahead and do the same for the weekly, the daily chart, what we're doing right now is we're trying to understand strength, and we're trying to get an idea on how strong or weak this market's going to be. So all we're waiting for, because remember, we want to act on confirmation and not speculation. Does everyone understand what it means to act on confirmation and speculation? I'll get back to your question in a second, Manan. I just want to make sure that first that everyone understands the difference between confirmation and speculation. If you are thinking in your head, you do. That's totally good. Okay, no worries. So that's correct. So when you speculate, you're making, you are taking action before the fact, which means that you're saying that, oh, Bitcoin is most definitely going to head above the 50% level, and I think now is a really good time to buy. So you're speculating on what could happen. But what we want to do instead is we want to get confirmation that the market's moving higher. Now, there's a whole bunch of rules you can use. Like you could use the Gann swing. I don't know if I can, yeah. You could use the Gann swing of actually rising highs and rising lows. You could use that as some sort of confirmation and then actually see what happens as it moves up into the 50% level and how easy does it break it. Right now, all we have is well, pretty much we don't really have anything. We have a low and we have a high, and now we're sitting here. We don't know if the market's going to continue moving down and break the low, or if it's going to move across and then move up and create a higher swing. So I'll see if I can, I don't know if I can draw. No, I can't. Instead of use a point. This app can be a little restricting sometimes, so nope, can't use that. I'm going to go ahead and use some trend lines just to draw in my idea. So the market could come down and simply break below the low. That's highly possible and wouldn't be, off the cards just yet. Or it could come down, it could move across. And all it means to move across is simply it's bottomed out and it started to move up. So when it comes to Gann swing, a cross move is simply the market is changing direction and it could move up. So we can't guess or we can't judge what's happening here because we don't have any confirmation. So to suggest, I should say, that the swing is going to move up is pure speculation. And everyone's saying that, oh, the market's going to move down tomorrow, it's going to move up tomorrow. Unless they are using a form of time analysis where they're forecasting market movements, they can't say that because all their research is based on speculation. Time analysis is slightly different where we're actually forecasting tops and bottoms in the market. So all these time cycles, but for example, this low can be forecasted out to give us this high. So the current market high in Bitcoin was forecasted by using prior lows. And we use time analysis to move out into the future. It's a whole new world out there. So I just wanted to remind you to always act on confirmation and try not to act too much on speculation. Even when I do the time cycle research for Bitcoin, I don't put out if it's going to be a high or low. I said, let's wait and see what happens around the state so we can get an idea on if we're moving higher or lower. And if we're moving higher or lower, then we can judge our next best action. So once we've understood the swing chart and we started to develop an idea on what, we've got to continue to build our hypothesis to, is the bias down or is the bias up? Once we've built our hypothesis, we can move on. And to move on, we want to look at Kagi. The Kagi is a Japanese trading tool. It uses a different method. It uses a slightly different, I should say, swing style to what Gann used, but it is a simple buy and sell tool. Let me go ahead and make this thicker so you can see it. According to the Kagi method, every time the the bar turns green, it's a buy, and every time it turns red, it's a sell. It's a simple trend following system, and all you need to do is take action every time the market moves from red to green, green to red. Now, if this market moves above this high, this swing right here, it would actually turn the swing of the Kagi chart green, and that would be an active buy signal. So until that happens, we simply wait. So that's just the daily move. As you can see with the prior daily moves, it can move sideways for a bit of time and give you choppy information. So it's best also to confirm it with the monthly swing or the weekly swing. The problem with this weekly swing, however, is that our most recent high is all the way up here. So we don't have any real basis to buy this low unless we get a few swings that create a swing high in the Kagi chart. So by using this tool alone, we're going to be left hanging unless we take risks on the shorter time frame, which is our daily chart. I'm hoping that makes sense. We want to make sure that a lot of our biases are being confirmed so that we as individuals can make our own decisions to take trades. Now, all trades are risk. We have risk on, we have risk off, and we want to assess our risk. And once we've assessed our risk, we then put our money down and pretty much move with the market, or we cut our losses and move out of the market. So what happens if Bitcoin's moving up? Well, then we need to start looking for other indicators such as how high could it go? Right now, we have some congestion around this blue line, and we have some support around this line in the middle. Now, if you don't remember what all these lines meant, let me go ahead and tell you again. The market has a low, the market has a high, and all you do is divide this up and you get three areas. You get the 38.2% level, you get the 50% level, and you get the 61.8% level. All we've done here is we've used the all-time high and the all-time low to create this. So it's over a long term. So it's taken this bit all the way down here, and it's taken this one all the way up here, and it's divided it. As we can see now with the market falling, it's falling. If we take this all the way down here and stuff here, it's fallen to the halfway point. So if we look at Bitcoin's top as an example, why can't I never put this tool on? Look at Bitcoin's top as an example. We've fallen 50%, which, well, we actually fell through 50%. We know that because the 50% is the blue one here. But we can see that it's slightly over halfway through the chart. So we've got some decent support here because it did fall through the 50% level and it bounced above it. It did try again to fall through the 50% level and it bounced above it. But now it's having a hard time getting through this 38.2% level. So until it can crack this level here, that still leaves the bias to the downside. Well, or at least the sideways motion, sorry. So we can't be right now bullish or bearish because we don't have any confirmation of the market moving up. As long as it stays between this 50% level and this 38.2% level, we're speculating on price. It's simply within a range and it's moving sideways. I move up, bullish. I move down, bearish. So what happens if it moves up and moves down? Well, then we have our price clusters. Now, I've already done a whole bunch of price clustering for this and figured out where the strongest levels of potential support and resistance and also take profits are. And I think what I found is relatively interesting. I think a lot of people are going to get caught out on both sides. So we have a potential take profit right here around the $43,000 mark. We have resistance around the $46,000 mark. We have potential take profit around the $48,000 mark. We have take profit, which is around the $50,000 mark. And then the next major take profit, which I found was interesting after we got all our price clustering occurring, was actually happening right after the top. So there's every chance that a lot of people are going to get caught out, at least for the short term, when this market moves. So let's say, for example, the market's over here, and a lot of people are watching this market, and it comes up, and they think it's going to break this top over here. But I think that based on a lot of the research I did, that we're going to get a potential top here, and it's going to fall down again. Now, that's not unusual, but we do have a major price cluster in here, which is why I also put in a take profit. you want to take money off the table, you can do it just above this high here, which is going to fool a lot of people. Hypothetically, you know, we're speaking about events that haven't occurred yet, but it could be also a good area to take profit, as a lot of people run in because it's breached the high, but then the market could reverse. Could, I say could, because it could just keep going up. It could reverse. Now, moving out into the future, again, I found a lot of interesting stuff. A lot of people are talking about $200,000 Bitcoin, and sure, it could get there. But in order for it to get there, it needs to push through all these price clusters. Now, price clustering, which I've just called I'll take profit here, is where we've used, if you remember, prior tops and bottoms and prior ranges to sort of look into the future, because remember, with technical analysis and all this price and time stuff, we want to know how far the market's run in the past and how far it can run in the future. And then we start to gauge on where we would put our take profit and whatnot. So I've done all the maths already, and these areas came up as areas where the market has in the past signaled that these areas are to look at. So that is something that I want to keep an eye on. So as we move from 87,000 to 90,000, a lot of people are going to be calling 100,000, but from memory, we got a price cluster. I think it was around 99,700 points. I've moved it up to around 101,000 just so that we can get a few percent over. But I really think from my memory, I think it was 99,700 was an area to be watching for Bitcoin. And I think the reason why I'm saying this is an important area, because there's going to be a lot of, I don't want to say sheep, there's going to be a lot of new investors waiting for it to crack that $100,000 mark, but it might just not get there. At least if it does get there, it would fall away before, again, in the future, trying. So unless your strategy is to continue to buy and hold, and that's your only goal forever and ever and ever, by all means, just buy and hold. But if you're trading and you're looking to take profit and looking to move in and out, or even if you're trying to accumulate and you want to know where you should not be accumulating, or you should not be accumulating around the $100,000 mark. If you are going to be, then wait for it to fall back. You should not be trying to accumulate around the $67,000 mark. If you are, we'll potentially wait for it to fall back. That's the whole point. It's not about like, oh, I'm going to sell, I'm going to miss out on all the future runs. It's where's the best time? Where's the best area? Where's the best place to add more if I want to add more, so I'm not buying the top. A lot of people buy the top all the time. I'm trying to give you another view on how we can prevent that. I really hope that helps. What's the time? Freaking hell, we've already been talking for an hour. Have we gotten a lot of value out of today, guys? If not, I apologize. That's good. So what are your thoughts on China, or countries like China, I guess, putting pressure to bring the prices down? Unless we have a construction boom that just abruptly ends, I don't think that the copper price is going to fall. This construction boom should end into and around 2025. That's when this whole boom that we're going through should end. Now, China is obviously just going to get in everyone's way like they always do, but I don't think that they can really alter the cycle when all this construction, and you know, even in Melbourne, Australia, even in the US right now, we're going through an infrastructure, new railways, new houses, new super buildings like we have in the city in Melbourne. They all need at least some forms of copper and iron and everything. I think we still have some time left before we get to a critical top. So that's my thought, but you know, I'm not always right. We're just talking right now. Okay, now I was going to do back testing with, can you go through the angle / 360-degree chart perspective again? You presented that on your copper chart. I've never seen that before. Mark, There's a lot of stuff, unfortunately, that you haven't seen, and it's because the people that teach this stuff are generally frowned upon and looked poorly upon by a lot of standard quote unquote market technicians, and that's because it moves into the realm of financial astrology. Now, whenever you're talking in degrees, so if we're talking in like degrees, like 360 degrees, well, that's financial astrology sort of talk. We're talking time, and time is directly related to planets. So if you're definitely interested in that sort of stuff, I would highly recommend that you study it, or at least I can produce some content on it. But it's a whole new world. So everything moves according to time. 360 degrees is the top, as well as 0, and 180 degrees, and then you have and other important degrees such as 120, and you have like 240. These other degree areas are very important. You've also got 90, 145. What Gann did was he worked out that when he divided the circle up into different portions, he found that the markets moved. And the circle is simply a way of simplifying this whole process. When the market moves 180 degrees of itself, or it moves 90 degrees, or it moves 120 degrees, or the 240 degree area, or even out to these 45-degree lines, we found that the markets were assimilating certain patterns. So if we take this, for example, I'm really going over your pay grade right here. But if we, what I mean by pay grade is this, as I mean that a bunch of people are on here not paying anything. So I don't want to give too much away. If we take this low on the 22nd of January, okay, 22nd, and we try and move out the portions of this circle. And let's say, for example, we move out 30 degrees. Well, 30 degrees would put us somewhere near the 22nd of February, right? The problem is that when we're talking in degrees, we're talking about the sun. Now, this is why this strategy doesn't work all the time, because a lot of people go, oh, let's just go at 30 degrees. And they go, what the hell's 30 degrees? Well, 30 degrees kind of equals 30 days. Got to remember there's 365 days in a year, not 360. So you can't do the maths equally. So it might be 28 to 32 days, which would equal a 30-degree move based on how many days are in the month. For example, February shorter, you got some 31-day months. So 30-degree, you need to give some leeway. So if we move from 22nd of April and we go out to around the 20, in this case, the 21st, we can see that we had an important top. Let's move 30 degrees around a circle. This is the first and only time I will present this information in a public forum. I will save that. I know you're all probably busy, and in that case, does anyone want to stay on while we go through the actual training session, which could take another half hour, or does everyone want to call it a night? Okay, that's no worries. Happy to stay. Happy to stay. I am. Let me just load up my charts and everything. Give me a second, guys. Well, I've already gone over time that I suggested for today, Jalissa. So I was just saying, if you have to go, I completely understand. But I'm just going to move over to the actual back testing, where we back test different strategies for tonight. So you go ahead and move a few things around. Just got to get my Google Sheet up first. Okay, so for those of you who are in the program, you'll be well familiar with this backtesting log. We use it all the time when we go ahead and backtest stocks. Now, part of the training session that we had before was I was going to provide you the answer as to why we backtest after we actually did the backtesting, but I'm going to give that to you up front. Now, if you want to make your life easy, I suggest that instead of trying to chase every single market, trying to chase every single stock, and trying to just get on the hype train that happens all the time, it's to really become familiar with certain stocks and how they move. The reason why I'm able to make calls on Bitcoin and the reason why I'm able to make calls on gold and the XJO and the Dow Jones and things like that is because I've really come familiar with how they move and how everything is working with them. So my only suggestion to you is that when you go out to the market and you go to buy a stock, make sure that you understand it deeply. How is it moving in time? How is it moving in space? Time and space. So time is like time-based, space is like price space and everything. How's it moving in time and space? And what does it actually do? How far does it run? How far does it fall? I already given you a lot of examples tonight on gold and the Dow Jones and the cycles, and also the copper price and sort of the thinking and the analysis I'm doing on that. And when you can really understand it, you can go out into that specific asset class or that specific market and buy it based purely on a fundamental reasoning and understanding of that market, instead of trying to guess how far it's going to move. If you're going to become an investor, a buy and hold investor, then whatever, just do your fundamental research and just buy and hold, because fundamental investors generally don't subscribe to I should say, a medium-term style of thinking when they should, because we have hedge funds and we have people like Warren Buffett who do fundamental investing, but they don't just buy a company and hold it forever. They buy and they sell. Warren Buffett would suggest he would buy the company when it's undervalued and he would hold it until it's no longer undervalued or fair valued, but instead overvalued, and then they would sell it. Hedge funds, managed funds, they all do the same thing. They buy all these companies when they're undervalued, and once they're fair or overvalued, they'll sell it. But a lot of people, when I see these cryptocurrency forums and I see stock forums, is they're buying and holding, now buying and holding forever. That's not the way you do it. You buy, you wait for the repeat runs, you wait for your take profit targets to be hit, and then you sell. So if you guys aren't in the private groups that we have, by the way, go ahead and join. You can follow this one at connect.schoolofchange.com/group/cryptocurrency. In this group, this is purely based on the cryptocurrency market, and it's where I'll be updating a lot of the cryptocurrency analysis. We've also got ones for those of you who aren't in the Share Market Masters one. Go ahead and join that. The forecasting is where we do all that forecasting. And we've got all the groups in this platform, so go ahead and join them. I definitely recommend that. I just wanted to get that out of the way, just for those of you who are watching that aren't in those groups. That's where it's all at. So let's go ahead, and I'm going to have to share my whole screen and not just the sheet, so I can get this going. Okay, so what I'm going to do is I'm going to use Optima, and I'm going to backtest the stock with Optima. And then in this chart, we're actually going to be placing all of our data in it. So I'm going to get a new one of these. I'm going to name it Trendline, Dow Jones, what am I talking about? Dow Theory, and Gann Swing. Rid of these. All right, in the chat box, just excuse the chat as it comes up. I want you guys to give me a good stock Don't give me a shit one, please. Give me a good stock that you want us to do this back test on together, and we'll spend 25 minutes, 30 minutes going through it. FMG, have we got all consensus and voting on FMG? You're very quick, man. Did you have that written there for like half an hour, waiting to press enter? Everyone's okay with that? I've seen no more coming through, so let's go ahead. Cool. FMG is 40 key metals. Let's download the history. Now we do all of our back testing on a weekly chart. If you're focusing on daily charts all the time, you're really doing yourself a disservice. I'm going to back test. I don't want to get too far back. Take it further. I'm going to back test from this period right here, this high. I could go back actually. It shouldn't take too long. I'll do it from here. If we need to go back, we can add more time. I'm going to start back testing from this high here. And no, I'm not. I'm going to do it from this low here because I want to show you the process. And I'm going to be jotting all the information into this traders backtest log so that we can get an understanding of what our profitability is and so forth. But for this one, here are the rules. Oh, not Astro text. We buy when we have a valid downtrend line. We have Dow theory trigger, and we have monthly and swing pointing up. Okay, so those are the rules. Now, I don't know if this is going to be profitable or not. I've come into this just suggesting that this could be a profitable strategy, but I have no idea. So these are the rules we're going to be following, and we're going to back test to see if this is actually going to work out. So what's our sell signal? Well, I'm going to put in an immediate 15% stop loss. And then, or let me just double check how this chart is moving. Or Dow theory down, and then rebuy. I'm going to do a rebuy because we have some moves here that I want to get back into. So rebuy Dow theory. All right, so let me explain this. We're not going to enter the market until we have a valid downtrend line. And then once we have a valid downtrend line, once we get a break above that downtrend line with the Dow theory trigger, and the monthly Gann swing has to be pointed up, we can sell at 15% stop loss, or the Dow theory triggers that the market is potentially moving lower. If the market moves lower, just for say a month or so, but then continues to move higher and we're unable to draw a trend line, we want to get back in on the next Dow theory trigger that happens. So this is how flexible you can be. Let me go ahead, just see if there's any questions. What's a stop loss? So Michael, a stop loss is essentially an area in price where if the market falls a certain percentage, we exit. So let's say hypothetically we enter right here, hypothetically, and then we're writing it up. We're writing it all the way up here. And we want to know what happens if the market didn't write it all the way up here. What happens if it came up and then fell lower? Or we want to know what are we actually willing to risk? So in this instance, if we do a 15% stop loss, we're suggesting that if the market falls to here, we're out. Even though the market keeps falling, we've sold up here. So that's a percentage point. So in this case, it was 52 cents per share that we're willing to risk on this actual company. All right, let's get rid of all this. So stop loss is just a way to protect your capital. I think that's it. Okay, we're going to get started now. So we're going to open up trading mode. I'm going to bring it back. We're going to go to a weekly chart. Now, if you don't know what Dow theory is, if you don't know what Gann swing is, if you don't know how to draw trend lines, that's not the aim of this lesson right here. I would encourage you to become a member of the group so you can actually learn all that. You know, join us and learn. That's because we go through all that. The purpose of this right here is to show you how we get our numbers. and how we actually formulate everything. Okay, so I'm ready if you're ready. So we're going to keep going forward until we have the ability to draw our first downtrend line. So what we're going to be doing is drawing a downtrend line, which is just a trend line that moves down like that. Simple. I'm going to open up another chart because I need to put a Gann swing on. Give me 1 second. Okay. Got it, got it. Excuse me, I'm just analyzing everything as we go. And I want to draw in a downtrend line. And what I want to do is I want to make sure that all the rules for downtrend line are being followed. Now, one of the rules is we can't have any breach of the trend line by more than 2%. So we need to make sure that if we're going to be drawing a valid trend line, that we follow that rule. We can't get any downtrend line in there. So we simply wait. And we want to get rid of this trend line because it's invalid. And we want to draw a real one. So we do it again. And if we can't satisfy the rule, we simply wait. So I want 2% leeway here. That looks okay. I'll just zoom in. I can probably move this one down a little bit. Oh, we're only 2%. So we're roughly on the 2% there. Now what I'm going to do is I'm going to draw a steeper trend line because I want to get in as low as possible, if possible, of course. Okay, so the market breached this trend line. So we now flatten it out. Again, all the rules on how to do this and how to actually analyze it are in the programs. So don't stress too much if you're not getting it now, because we speak about it everywhere. All right, so what we had here is we had a break of the trend line. Most people would start buying right here. That's because that's their rule. Once the trend line breaks, buy. But we have other rules that we're following, so we simply wait and we ride it out. So what I'm going to do is I'm going to try and flatten it a bit more, making sure that all of my rules are met. So 2% rule here. Yep. This trend line up here is no longer valid. We're not watching it anymore. We're now buying this trend line. What did I write here? Okay. All right. So now what we've got is we've got a few weeks above the trend line. Now we're going to wait for a Dow swing and also the monthly swing here. So Dow theory entry, and also the monthly swing has to be green, has to be pointing up. So until it points up, we do nothing. Okay, as we can see, the market continue to fall. And all we got to do is flatten it out a bit, making sure that all the rules are met. Are we still using this one? Yes. Okay. So as we can see right here, we've got a green swing higher. So the monthly is now ticked. And now we're waiting for a Dow theory entry. We haven't got it, but we haven't bought. Simple. Because the market is continuing to trend lower, we are able to draw in new trend lines. As long as all the rules are met, which they are. So our monthly is still down, monthly is up, and now we're waiting for Dow theory. There we go. This right here was our first buy, my friends. So that was at $2.16. We'll drop it in here. And then we want to drop the date. So it was 9/10/2015 to 9/10/2015. And that's it. We bought $10,000 worth or 4,600 shares. And now we wait for our Dow theory entry or 15%. So here's our Dow theory, our Dow theory exit or 15%. So here's our Dow theory exit. So we got a trigger slightly later. That was the 4th of 12, 2015. And that was at $2.05. We mark that as a 5% loss. Now what we want to do is we want to repeat this because we want to know what our losses are going to be like and what our gains are going to be like. So now because we had this action down here, we actually need to draw a new trend line. because new rules have been set. I just got to make sure that this is the right setup. Too steep. So it's 2% there. Try to get a best fit here. 2% there. So I'm going to bring this up to sort of be in between. All right, so now we try again. We had a 5% loss. Market ran lower. If we had not sold and instead waited for our 15% to trigger, we would have lost a lot more money. So it's always good to just follow your rules and just mark them. Okay, so this is up and we're waiting for now a Dow theory entry. Now we had our Dow theory entry up here. $3.30 and $4.16. And now we wait. I'm just eyeballing for a Dow theory exit, which is a specific exit strategy. And now we exit. So that's $5.97. Gain on 14/4/2017. Okay, so 210 days was our trade, and 80% gain was that. So, are there any questions? Nope. So now all we do is rinse and repeat. We want to make sure that we can have a valid downtrend line. I'll see if I can draw something in here now. Make sure you follow all the rules for trend lines. If you don't know them, they're written out, they're taught. We're waiting for the monthly to swing up, which it is now. And now over here, we're waiting for a Dow theory entry to get back in. There's our Dow theory entry, 1 cent above there. So that's $5.50 about. Let's go. All right, so there's that exit. $5. 13.10. 17. That was a 9% loss. Gain. You can see the importance of taking your losses. What's the low of this one? That is $4.52. This one is $4.53. Want to make sure that the rules are satisfied for trend lines. Can't get anything in there. So if the trend continues up from here, we enter on Dow theory. We technically have an entry here. It's not looking too good, so we'll see. $5.42 and 16,218. There we go. So down. I think we've just hit our 15% stop loss. So it wasn't a confident trade, and whilst right now we're trading based on rules. Once you understand how this market moves, you might be like, okay, it doesn't look that great. I might not actually take this trade. So we'll log this one in because we want to make sure that we've got down how the market moves, and later on we can actually change our rules based on what we understand about that market. Oops. Yeah, let's go ahead and try and get in a new trend line. A tool. It's not going to be possible, I don't think. What we'll do is we'll pop in an invalid trend line for now. Let's see how the market moves from here. We should be able to make now this a valid trend line because all of our rules are satisfied. Okay. So monthly swings up. We've got a break above the downtrend line. What we're doing now is we're waiting for a Dow theory entry, which we have it here. $4.25-ish, or 119. And wait for our Dow theory exit. Our Dow theory exit happened here. $8.59. 26,719. 100%. As you can see, what we're doing is we're trying to get the big gains and we're trying to minimize our losses. That's the whole point here. And all we do now is rinse and repeat, wait for it. If we don't get the rules satisfied for a downtrend line, I am going to be entering on Dow 3, like I said before. We want to get back into the market if it continues to move higher. We'll enter back in at $9.23. And that's 8/11/19. The interesting thing about this is with some foresight, we know that the market's going to turn lower. Well, I don't know about this stock, but all the markets turned lower in February. So we'll see how that affects here. Okay. We've got an exit here at $10.51. 28/2/2020. So our rules provided us a 13% gain. Don't have an exit, we have instead another entry. But if we do short-term bar analysis, we can see that the close is at the bottom, so the bears are coming back in. But anyway, I'll jot it down, 1/5/2020. And that is $12.08 or so. Right now, we're waiting for a Dow theory exit. There's our Dow theory exit. Right below this low, $17.10. Oops, what's that doing there? Oh gosh, away. And 18/9/2020. It's not working anymore. 40% gain. We wait for trend lines, or if the trend continues, we enter back on Dow theory. We have no trigger here, so we can't enter until we get Dow theory. Stick with the plan, because the plan will often protect you. So instead of rushing into the market up here, the market pulled back and it gave us an entry. 21/25. 23/4/21. We added data. So to summarize, that we probably would have had plenty of time to actually go back further. We want to make sure that we capture all the swings so that way we know that both in bull markets and bear markets, we can protect our capital as well as get in at low prices and sell at higher prices. That's the whole point here. So we've currently got one open trade. Our average trade per day is 140 days. So now we know that. So if we're going to be buying this specific stock, we know that we're going to be holding it like half a year. Based on all of our profits and losses, we had an overall profit of $20,000, which is 29% of everything we put in. We had a total of 8 trades. We know one's currently open. We had 4 wins and 3 losses, which gives us a win-loss ratio of 57%, which is interesting. And the golden nugget, though, is to backtest enough data until we can fill up this 30, because right now we don't have enough data. We want to make sure that we backtest enough times that we get 30 backtests in total. But that, my friends, is how we backtest. And I just used a simple strategy that we just developed together for FMG. I'll go ahead and share this with you later. But what I would do is I would go back, if I were you, and rinse and repeat this strategy with more data. Maybe go back to 2005 and run this whole thing out. That way you can see what the potential trade times are for the last run. That way you can start to build a picture for future runs. I'll go ahead and stop sharing the screen just now. Does that sort of, are we happy? Is that interesting or what? That's good. That's good. I would encourage everyone who wants to continue to learn more just to reach out to me, because we are constantly doing these sort of things, and we have the methods of whereabouts. I'm glad, and I really just want you guys to get the best foot on how to actually do this, even if it's cryptocurrency, even if it's some other market, gold or copper. I really want you guys to have the best understanding of how to do this and start to formulate a plan before you actually go into the market. Go ahead and find out what cycles are running the Bitcoin market. Go ahead and, you know, use your degrees that you sort of got a glimpse of tonight on forecasting your own turn dates. I don't know if you guys follow me in the cryptocurrency group that I joined recently, but I started putting out some interesting forecasts and interesting information. There's a lot of people that just, they want to attack you. So all I can say is thanks. You guys did an awesome job coming on today and spending some time with me. And I hope, as always, you guys leave in a much better position. No worries, guys. Any questions before we wrap up? If not, you all can go to bed.